Everyone, and welcome to the crash course for new Forex traders. My name is Gail Mercer, and I'm going to be your hostess for today. Now, before we get started, I would like everyone to read over the Nadex risk disclaimer. It is for your protection as well as our own protection. Basically, you should always remember that you should never trade with money that you cannot afford to lose. Now, while everyone is still joining the room, I would like to wish everyone a happy Valentine's Day and give you a minute to read over the disclaimer. I hope everyone is having a wonderful day. Now, for those of you that do not know me, my name is Gail Mercer, and I have more than 15 years of trading experience. I started out with a company a long time ago that programmed indicators for TradeStation, NinjaTrader, and multi-charts. And I actually just fell in love with the price bar. I thought it was really unique that we could actually see real-time information on these markets. Currently, I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities, Traders World, and Top Shelf magazine. Previously, I have been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, The New Trader's Guide to Trading Nadex Binary Options and Spreads, and of course my latest book, which is Trading Nadex Binary Options Using Currencies. Now, today's agenda is to really explore the differences in Forex versus other markets, as well as learn to identify the differences between the currencies. We also want to identify the hours that Forex market moves and understand the market reports and the effects of those market reports on the Forex symbols. Now, to get started, let's understand what Forex is. It is the largest market in the world, but there's no central exchange, and that means there's no true volume. Instead, what we do is use tick count to supplement volume. Now, it does move for 23 hours a day. It opens at 6 p.m. Sunday evening, and it goes through until 5:15 Friday afternoon. There is a 1 hour period where it is closed between 5:15 and 6 p.m. Now, there are, excuse me, there are different marketing openings around the clock. You have Australia, you have Asia, Germany, London, in the US. Now, because it has so many different market openings, it makes it really easy for people that have day jobs to actually trade the Forex market. That's the reason I started with it, okay? I worked a day job, but I would go home and trade Asia, or I would get up and trade London. Now, here's the thing between the currencies, okay? Each currency moves just slightly different, okay? All of the yen-based currencies have 3 decimal points. The third decimal point is considered the half pip, and I'll show you that in a moment. All the other currencies have 5 decimal points, with the 5th digit being considered the half pip. Now, the Aussie, you do need to remember that 5% of the GDP is from mining gold, diamonds, uranium, and nickel. Okay, it is one of the largest producers of gold, so there is a positive correlation typically between the Aussie dollar and gold. Well, what does that mean? It means if you have a market that moves gold, it's probably going to move the Aussie US dollar as well, and the Aussie yen. Now, the Canadian dollar is the 7th largest producer of crude. And what that means is if crude goes up, the Canadian dollar typically goes up as well. But remember, the CAD is the second symbol in the currency. The first symbol is the USD. That means that there is a negative correlation with the USD CAD. In other words, if you see crude going up, you would expect the USD CAD to go down typically, okay? We all know anything can happen in the market, but typically that is your correlations. Now, let's discuss the pips versus the half pips. Typically, on the USD JPY, let's say it's currently trading at 108.688. This last digit, which is the 8, is considered your half pip. So this one here is considered the half pip. A 1 pip move would be if the yen moved from 68 to 69, okay? But a half pip would be the third digit. If this one moves, that would be considered your half pip move. Now, typically, if you're trading Forex, we don't even look at that number, okay? We only look at the actual pip numbers, which is 68 to 69. With Nadex, that last digit actually will make a difference, okay? Because, you know, if you're at a strike price, let's say your strike price is 108.68, okay? And let's say that you're long, all right? If you are long and that last digit is a 1, that means it expired in the money. So in this case, those half pips will make a difference, okay? Any questions on that? Now, what type of expirations do you have if you're trading Forex? Well, you have an overabundance of expirations with Nadex. You have the 5-minute expirations. They are available on the Aussie dollar, the euro yen, the euro dollar, the British pound yen, the British pound dollar, the US CAD, and the USD JPY. A 5-minute is a little bit too fast for me, so I use the 2-hour expirations. Now on the Aussie yen, the first 2-hour expiration is at 10 a.m. That means it begins at 8 a.m. On the Aussie dollar, the first expiration is 8 p.m. The euro British pound is 10 a.m. The euro yen begins at 8 p.m. for expiration. On the euro dollar, it is 8 p.m. On the British pound, it is 10 a.m. On the British pound dollar, it is 8 p.m. On the USD CAD in Swiss franc, they both have the first expiration at 10 a.m. and then the USD JPY, the first expiration is at 8 p.m. Now, in addition to these, you also have daily expirations as well as weekly expirations, okay? These time zones are in New York time, Barney. It's Eastern time. Now, does everybody know these set daily expirations? It's 3 a.m., 7 a.m., 11 a.m., 3 p.m., 7 p.m., and 11 p.m. So you have, in addition to all of those others, you have 6 daily expirations to choose from as well. Now, the next important aspect that you need to know is the strike width. Does everyone in the room understand what I mean by strike width? Okay, the expiration means when the trade expires. That is correct. Okay. All right. A lot of you do not understand what I mean by strike width. So I'm going to show you real quick. Okay. On a 2-hour binary, let's use the Aussie dollar as an example. Okay. Right now, the Aussie dollar is currently trading at 78.70. Okay, so let's presume that there is a strike at 78.70. Okay, the strike width identifies where your next strike price would be. In this example, if we have a strike at 78.70, the next strike above would be at 78.74, and the strike below would be at 66. This is considered the strike width, okay? So you would have 0.7866 below and 0.7874 above. The difference between these two numbers is 4 pips. Does everybody understand that now? So in the case of the Aussie yen, that strike width would be 5 pips. On the euro British pound, it is 10. On the euro yen, it is 10. On the euro dollar, it is 4. On the British pound yen, the British pound dollar, and the USD CAD, all of those are 10 pips. On the USD Swiss franc and the USD JPY, it is 4 pips, okay? Now that is on a 2-hour binary. Now let's say that we're looking at the daily. You can see all of the dailies across the board are 20 pips. So let's go back and look at a strike price at 78.80, okay? Where would your next strike be? It would be above would be 7,900, and then below would be 78.60, okay? So I can tell at a glance, okay, if I'm using a daily binary, let's just have a scenario here, and let's say I only have an hour remaining in that binary. If price is trading at 78.60, would I want to use an out of the money binary option? Well, immediately I would say, okay, if this strike is at 78.60, it's going to have to move 20 pips, and that might not be feasible on the Aussie dollar, especially if it's like 12:30 in the afternoon. Does everybody understand that? So it's kind of identifying exactly how much of a move you need to get to the next strike. Does everybody understand that? Any questions on that at all? Now, I like to trade the 2-hour binaries. I'm just about addicted to them, if there is such a thing. And I typically focus on the Aussie dollar, the USD JPY, and the euro dollar. And as you can see, all of these have the 4 pip spreads, okay? So you can use an out of the money relatively easy because it only has to move 4 pips if you're using a 1 strike out of the money binary option, okay? Any questions on that so far? All right, now, the Australia market opens at 5 p.m. New York time, okay? Asia opens at 8 p.m. New York time, although sometimes, like when you have daylight savings time, that will go back to 7 p.m. because Asia does not use daylight savings time, okay? Germany opens at 2 a.m. New York time. London opens at 3 a.m. New York time, and then the U.S. cash market opens at 8 a.m. New York time. Yes, you will get an email with a link to the recording of the webinar. Now, one thing that you need to pay attention to is Germany and London. There will be just about a 2-week period. When we do daylight savings time, there's a 2-week difference between when we set our clocks and when they set their clocks up, okay? So this is, something you need to be aware of. And then on Asia, you need to be aware of the fact that Asia will actually open at 7 p.m. during the summer, not 8 p.m. Okay. Do I trade the USD Swiss franc? I do, but I typically will use a longer time period because it typically moves slower than, for example, the euro, dollar, or the USD yen. Ever since they unpegged the Swiss franc, it has not moved as much, okay? And, when they do stuff like that, when they unpeg the Swiss franc to the euro, you have to modify your trading to capture what's happening, in current affairs. And that was a current event that really impacted Forex. Okay, which market reports affect which currencies? Okay, now in March, I'm going to be doing, I hope, several webinars on market reports and how to trade them. And we're going to be hopefully using different market reports. But in this case, we're going to look at the Aussie, okay? And this would be the Aussie dollar or the Aussie yen, okay? You have retail sales, trade balance, employment change. Okay, this is actually a really good one too. And the cash statement, okay? Now, I already know from my previous experience the employment change and unemployment rate historically on the Aussie will move the Aussie US dollar 40 pips. And this is where knowing your strike widths comes into play, okay? So if you're anticipating a 40 pip move on the Aussie, how many strikes is that? That's 10 strikes, okay? Well, you don't always get the average move. This is historical and we're dealing with current day, and sometimes your averages can be off, okay? So what I do is I divide that number by 2, okay? So that tells me that it's probably going to move 20 pips. How many strikes is that? That's 5 strikes. Okay. Now, is everyone following me so far? I don't want to lose you on this. All right. If it's going to move 5 strikes, I typically, when I enter, I set a profit target. In order to get that profit target, it has to move 2 strikes in my favor, okay? So that means the maximum I could go out would be 3 strikes out of the money, okay? Now, I try to go about 2, okay? But again, that's where I'm going to really zoom in on the risk and choose the one that I can tolerate better, okay? I do believe the Aussie report is tonight, Jason. And I love trading that one. Okay. And this is where really knowing your strike widths is going to come into play for y'all. Okay. Now the British pound, there's a lot of market reports that affect the pound. What's the strike width on a pound though? The strike width on the pound is 10 pips. So you have to allocate for that difference there. Okay, so you have the manufacturing PMI, construction PMI, services PMI, manufacturing production, CPI, average earning index 3 months per year, Prime Minister speeches, Bank of England speeches. Now, Typically, I will tell you this. I do not trade the speeches. I just take that off of my radar, okay, because it's not a market report. Sometimes it will cause volatility, and sometimes they don't say anything, okay. Retail sales, preliminary GDP, the Bank of England inflation report, the MPC official bank rates votes, the monetary policy summary, the official bank rate, and the second estimate GDP quarterly, okay? These are all high volatility reports, okay? On the Canadian, we have the employment change, the trade balance, the unemployment rate, the Bank of Canada monetary policy report, the Bank of Canada rate statement, the overnight rate, the Bank of Canada press conference, manufacturing sales month over month, CPI month over month, core retail sales month over month, GDP month over month, Bank of Canada governor speeches. And again, I do not like trading the speeches, okay? The speeches can create volatility or not, okay? So I generally do not trade any of the just plain Jane speeches. You just don't know what they're going to say. And then, of course, the crude oil. Now, the other one on the crude oil that you need to watch for is they will have the Bank of Canada rate statement at 10 a.m. and typically it comes on a Wednesday, and then crude oil comes at 10:30 that day, okay? Don't trade that correlation on those days, okay? Because this one is going to dominate. And historically, that is an 80 pip move. And what is the strike width on the US CAD? 10 pips, okay? So that tells you it's going to be 8 pips. If you divide by 2, that tells you you can go out maximum of 4 strikes. But remember, you need 2 strikes in your favor to achieve the profit target typically, okay? So that tells me at the most I can go out 2 strikes. 1 would be even better. Okay? Does everybody understand that? Now, their unemployment rate, which typically comes out at 8:30, I think it's once a month on a Friday. Again, that's a good one to trade as well. And that one will also typically move anywhere between 50 to 80 pips as well. Yeah, it can be a very volatile one. Now, the euro, it does not have as many on the euro. You have the ECB president speaking. Again, it's not one I would trade. Then you have the euro minimum bid rate, the press conference, the euro group meetings. I do not trade them, but you will see volatility spikes throughout the day when they have those meetings because they come out and they talk to the press. So if you're trading during the euro group meetings, just remember that they can affect your trades that day. And then the German IFO business climate, okay? Now, out of all of these, the one that will move the market is the ECB press conference. It's not the bid rate, typically. It's the press conference that is probably going to move the market the most. Now, on the yen, you do have the Bank of Japan governor speaking. I don't trade that one. The Bank of Japan outlook report, the policy rate, the policy statement in the press conference. Sometimes I will take a directional trade on these if I can identify a particular direction. The issue with the Bank of Japan rate announcement is they don't give you a specific time. Now, I typically plan my schedule around market reports because I love trading market reports. And since they do not give you a specific time, you typically have to use the dailies, okay? So this is one I don't trade a lot unless I can see, okay, the move is likely to be in one direction or the other. In other words, it is a biased approach, not a volatility approach, okay? You also have the preliminary GDP quarterly, not the monthly, but the quarterly is the one that will move the market typically, okay? Then on the Swiss franc side, you have the LIBOR rate, the S&B monetary policy, the press conference, and the speeches. Again, these are ones I do not trade on the Swiss franc because it usually doesn't make enough volatility for me to actually go in there and trade these, okay? But if you like the franc, then these are the ones that you would pay attention to. Now, the US dollar, my favorite of all time, is the non-farm employment change. If you have not watched it, we did a presentation the first week of February, and I traded the non-farm employment in the webinar, showed you how to do it, okay? That's typically the first Friday of the month. March is the month where it's going to come on the second Friday. It's March 9th, I believe. That is the one I love to trade, okay? Gold, USD JPY, the British pound dollar, the euro dollar, the Aussie dollar, the US CAD. You know, if it is a US-based currency, it is game for trading, okay? Because it's going to move the market. Then you have the core retail sales. You have the FOMC rate and statement. The Fed chair speaking, again, I don't actually trade that unless it is associated with the FOMC, okay? Then we have CB consumer confidence, the core durable goods, the CPI. This is one I traded this morning, and I mean, it went down, and no, it went up and then down. And I had done a volatility spread on that. So in that case, I was able to take profits on both sides of the volatility trade. The ISM manufacturing PMI, the PPI, the preliminary U of M sentiment, and unemployment claims. Now, my least favorite of all of these would be the unemployment claims. They used to move significantly, okay? Not so much anymore, okay? So it may, you know, come in the future where that unemployment claims actually starts moving the market, but the biggest one of all would be that one, okay? And again, I recommend if you were not there for that one, go back and look at it, and it will show you how to do the volatility-based trades. I call them my no-brainers, really. Now, here's the biggest question that most new traders have. How much does the currency move and when? Okay. If you want to use an out-of-the-money binary on the Aussie dollar at 9 p.m., okay, how far out of the money is reasonable? Okay. Should you go 4 pips, 8 pips, 12 pips? I mean, how far out? Or if you want to use an at the money or a deep in the money, how much volatility is likely at 7 o'clock at night on the Aussie dollar? Okay. Well, I've collected data on this for the last 10 years. Okay. And this is showing you the 2016 minimum move for the Aussie dollar, okay? So now I can look up on this and say, okay, I want to trade at 7 p.m., which is here, okay? And it's February Okay, so what's the minimum move? The minimum move is 7 pips. Okay, again, let's go back to your strike widths that I showed you earlier. How many strikes is that? It's 1 strike out of the money. Well, thank you, John. I'm glad you enjoyed the book. Okay, what if I wanted to trade an out of the money in August? No can do. It doesn't even move 1 strike. Do y'all see that? Now remember, this is the minimum. Plan for the worst move, okay? To me, planning for the worst move is using the minimum, okay? Now, in addition to minimum move, in the book that I wrote on currencies, have all of these for all of the currencies. We also can look at what's the best case scenario, okay? Or the average, okay? In this case, if I, again, using 7 p.m., okay, February, it moves 12 pips, okay? How many strikes does it need to move for me to potentially get my profit target? It needs to move 2 strikes above my strike, okay? I went out 1 strike, so that tells me it needs to move 3 strikes. 12 pips, that's 3 strikes. Does everybody understand that? But again, if I look at it for August, I can't do that. Does everybody understand how I use the averages and the minimum moves? Okay. Okay. I'll explain it one more time for you, Richard. If I want to take, this is my scenario, I want an out of the money. Why do I use out of the money? Because I like to lower my risk, okay? Out of the money has cheaper risk, okay? And I want to use an out of the money binary, and I want to trade at 7 p.m. And this is February, so I look under the February column and I see the average move is 12 pips, okay? Anytime I enter a binary option, I set a profit target. And my profit target, based on my experience with Nadex, it typically has to move 2 strikes above my strike. So that means it has to move a total of 3 strikes. Okay? That's for me to achieve my profit target. Each strike is equal to 4 pips. 4 times 3 is 12. So I need an average movement of at least 12 pips. Does everybody understand that now? Okay. Next question. How to use the out of the money on Nadex? Okay. All right. Let's say, let me just bring a chart over real quick and I can show you. Okay. Here's a chart. This is current chart for the Aussie dollar. And I'm going to change the color to hopefully something that you can see. Okay, so right now we're at 78.82. Now let's presume there is a strike at 78.82. I don't have Nadex open, so we're just going to presume that this is where the strike is. This would be considered the at the money, okay? Literally, that means price is currently trading at the money, which is the current strike. All right. And out of the money, if my bias is to the long side, I believe this is going to go up. The first out of the money would be 78.86. How do I know that? because my strike width is 4 pips, okay? If I add 4 to this, then that makes my out of the money 78.86, okay? Now, I know that price, if I am here with my out of the money, okay, I need price to get to 78, it goes here, 94. And more than likely, based on what my experience has been, if it trades above this here, then I will achieve my profit target. But that is dependent on whether there's sufficient buyers and sellers in the market for your order. Let's say that you're in there with 200 contracts, okay? Then you might not get filled on that order because there's not sufficient liquidity, okay? Does everybody understand that now? Now, the opposite of that is the short, okay? Let's say that my bias was to the short side. Again, using the at the money, which is 78.82, the out of the money for a short position would be 78.78, okay? And then if I went in this direction, I know that price would need to get down to 78.70 for the potential for my profit target to be filled. Okay? And this is why I suggest that you learn the strike widths, because I do all of this automatically. I don't even have to think about it. Okay? But if you're having to go back and refer to notes and stuff, then it's going to slow you down. Memorize it, okay? Are the slides available for download? No, they are not, Ebenezer. But you can go back and replay the video as much as you want. So any questions on this? Your target price. Binary options don't really have a target price. They have a target value, okay? Most of my trades, okay, I would say probably 75% of my trades, my risk on the trade typically is less than $35, okay? Now, for me to, and let's presume this is a long because the longs are easier for you to understand, okay? If I go long and my risk is limited to 35, then typically I just automatically go ahead and set a target at 80, okay? That's what I typically do. They send out an email with the video, and it's also located under the Learning Archive, and I'll show that to you in just a moment. All of these tables are printed in the book, Trading Currencies Using Nadex Binary Options, Anthony. Okay, any other questions on this? Because I do want to have time to show you where to view the video. All right. Now, my website is TradersHelpDesk.com, and you can also email me at gm@TradersHelpDesk.com if you have any questions, okay? Now give me just a second because I want to show you where you can actually go to see the webinar archives. And let's just go to nadex.com here. And this will be useful if you want to see like the non-farm employment change. If you go here to the Learning Center, mouse over the webinar archive, and then left click, you can see that last week I did how to trade Forex on the non-farm employment change report. You can watch the webinar there. You can also sort this by presenter. So for example, if you just wanted to see the presentations I've done, you can actually select Traders Help Desk, and you can see that there's secrets for trading the crude oil inventory report. I think we actually did some trades on crude that day, and this is how to trade the Australian employment change report. Now that report comes out tonight, so you have plenty of time between now and that market report being released, which I believe is 7:30 tonight. Okay, and I mean, these are easy concepts for trading these high volatility reports. Okay, and really all you have to do is click watch webinar and they'll start up. Now after today's presentation, they generally also send out a link that has the video as well. Okay, any other questions today? I would like to thank everyone for joining us today. I really enjoyed having you and enjoyed your questions. And again, if you need to email me, my email address is gm@tradershelpdesk.com.